after a fairly quiet Monday because of the US holiday, where we had a lot of muted activity in the market. Volatility is coming back in today on Tuesday, and we do expect it to continue for the rest of the week because we have quite high impact news coming in. My name is Samson Mzera, and welcome to this session of the Market Watch series, where we check out the charts, what is going to happen, what to expect, and how it's going to reflect on the market. So be sure to stay tuned, subscribe, and share for more. This week, we're expecting a flurry of US data to come in. So first off, we are still in a situation where we are expecting a strong dollar. And this is because of the information coming out of the US in terms of the status of the US economy and the health of it. So for example, we did see some quite strong GDP numbers coming out last week, and other numbers are backing this up. So it looks as though the US economy again is proving to be very steady. And when you're looking to trade currencies, you usually pair it with other currencies. So for example, in this case, you have the dollar on one end, and these other currencies that we're pairing them with, for example, the euro, don't have quite as good economic conditions as the US. And that is why we're seeing some weakness in these other currencies as compared to the dollar. And it's because we expect the central banks of these other countries to be slightly more aggressive than the US. And because the US also has room. So for example, if you look at the USD JPY pair, we are seeing this reversal of this mega trend that we had. Analysts are now speculating that the BOJ isn't going to be as aggressive in hiking rates as initially thought. So we do expect by March of 2025 to see the BOJ getting to 0.5%. And if the Fed is cutting, they'll still be higher than 0.5%. So at the end of the day, it looks like it's still feasible to short the yen against the dollar because the dollar offers higher interest rates. And this is what has been happening. If you look at the chart, you've seen it reversing, and you've seen the USD yen pair chug along higher. And if you're trend trading, this is probably a reversal and a continuation of this new trend that has emerged. So traders will be looking at key levels on the USD yen pair to see where we will see bounces in continuation or in line with this trend. It's important to take note of incoming data this week. We have a lot of employment numbers and manufacturing numbers that are coming in. So these are crucial in determining or in assuring the current dollar trajectory remains as is. And the theme is the dollar is expected to continue strengthening for the short term, for the near term, while we wait for the market or while we wait for the Fed on 18th of September. Another interesting pair to look at today is the USD CAD pair. Now, we do expect strong dollar fundamentals as already discussed, but on the other side, if you look at the Canadian side of things, we are expecting a cut from the Bank of Canada. And these might be reasons to believe that we'll see some bearishness on the Canadian dollar. And if you pair those two together, then that forms that uptrend. And it seems as though the market is already pricing in that uptrend as we speak. It did form quite some interesting opportunities on Monday and some good entry points for traders who are looking at the only volatile currency we saw in the wake of Tuesday's trading session. So we are seeing that pullback occurring at the moment, and we will be monitoring to see if the data continues to come in positive, then this might lead to a continuation of that trajectory higher. Lastly, we will look at the Swiss franc, and we've seen some unusual strength in the Swiss franc over the last couple of months, and the Swiss National Bank has been expressing some concerns with this. The Swiss franc usually, in many times, usually strengthens because it acts as a safe haven asset. And when they start expressing concerns, they usually are a bit more aggressive in terms of actions in the currency markets or interventions in the currency markets. So this morning, we've seen the inflation coming in lower, and this might give them room to be more aggressive in terms of either cutting or being more active to ensure that the Swiss franc weakens a bit. So we are seeing that reversal in the trend also in USD CHF, and it might continue to materialize in case we see strong numbers coming in from the US. So this will justify that continuation of this new trend that you're observing in the Swiss franc. Having said that, make sure to stay tuned because we have a lot to cover this week on a daily basis. If you want to trade any of these assets, be sure to check out the description below, and see you in the next one.